even your most diehard silver bulls will tell you that silver usually lags gold at first and then more than catches up at the end of the bull market. So if we were in that catch-up phase, that would signal the end of the bull market. And I don't think we're there.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 20th through October 27th, 2025 while supplies last. First this week, 1-ounce Gold Philharmonics are just $99 over spot. Next, 2-ounce Silver Canadian Rocky Mountain coins are only $4.50 over spot per ounce. Finally, Kilo Silver Britannia coins are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre, the independent speculator. Lobo, thank you so much for joining us today.
Always good to be on the show with you, Elijah.
Well, it's great to have you today. I did want to discuss what you've called a very significant pullback in the precious metal markets. I think it's interesting how we've run up here so far, so fast. And just at the beginning of this month, we're kind of back to where we were, and everyone was cheering gold and silver on. And now they're a bit concerned, a bit saddened, obviously, by the spike down we've seen on Friday and then also Tuesday. Your perspective on where we are at the moment?
All right. Well, I'm going to get Rotten Tomatoes thrown at me, but let me just say before I answer the question, I remain bullish. My overall perspective is bullish gold and silver. I do not think we've reached the top for this cycle. People are going to say the opposite in the YouTube comments, but oh well. That having been said, whenever something goes vertical, whenever something goes into hockey stick mode, it is reasonable and prudent and experience-based to at least pay attention to that and understand that that can't go vertical forever. Like no price can go to straight line up forever. And the longer it does, the more likely the correction and the more extreme the correction is likely to be. If something is, going up at a reasonable pace, it's not so likely to come screaming down. Or there are a lot of conventional market wisdom words here, adages and things. Like, for example, the markets will take the stairs up and the elevator down, that sort of thing. That's based on real-world experience, Elijah. So I'm not saying the market is stopped. I'm saying it is reasonable and prudent to make sure that you don't let a big move up like this slip through your fingers. This is the number one message I've been really pounding the table on the last week or so. And I have gotten a lot of hate on social media. But I'm not telling anybody to sell out completely or that the market is peaked. I'm saying make sure that your big wins don't slip through your fingers. I mean, imagine you're some long-suffering gold bug who's been waiting years or decades for something like this. Do you imagine how bad it must feel to be right and then not make any money on it? That's really the point here. Is I'm not making a bear case. I am saying that nobody should lose the opportunity on the table. Nobody should be forced to suffer being right about the market and not make money off of that. So choose your own strategy. I have something you and I have discussed before called the upside maximizer. You don't have to copy me. You can do it however you want, but don't let big wins slip through your fingers because nobody knows what happens next.
Now, can you expand a little bit on the upside maximizer strategy? Some people, take half off the table when they've doubled their money, but your strategy is a bit more sophisticated in that and actually gives potentially more upside as well.
Yeah, this is my modification of what my mentor, Doug Casey, taught me, which was to sell half on the first double strategy. We used to call it the Casey free ride back in my Casey days, which is fun. That works. You can sleep well at night when you do that, and it works. But the problem is that it turns your 10 baggers into 5 baggers, or, your legendary 100 bagger into a 50 bagger. I don't know why people can complain about 50 times their money, but they will if it could have been a 100 bagger, right? So without getting too far into the weeds here, it's basically like using a trailing stop, but not as a stop loss. You ratchet it higher as long as the stock keeps going up. And then when it rolls over, then that's when you take the profits. So it's not sell half on the first double. It's take some, not necessarily all, profits when the stock is no longer rising. How do you know? Nobody knows that for sure. Well, that's why you use the trailing stop mechanism so that the math gets you out. You don't have to know where the top is. And I can tell you, Elijah, that right now I've just executed a couple of these. I had some big wins. One was up like 3.5 times. And I decided, because of the risk in the play, that I was going to take double the money I put in off the table. So like, what I like about this is that left me with 1.5 times the money I had to begin with. So like right now, you know, if people are going to say, oh, Lobo, you're being too cautious, you know, the silver and gold, they're going to the moon, right? Okay. I still have 1.5 times more money in this stock now than when I started. So if gold and silver keep screaming high from here, I will make more money. But if that's not right, if it goes crashing down to, you know, let's say it goes down $1,000 an ounce, Elijah, that's still well over $3,000. That's a great level for which the miners can make money. So it's not the end of the world. But of course, the stocks would just tank. So, you know, if this stock goes way down, I've not just locked in, I've not just gotten my money back off the table. I have a double off the table. Like the very worst thing that can happen to me on this upside maximizer execution is like the thing goes to zero and I get not a penny back for the rest of the money I left on the table. I will have a guaranteed double in my hands, including fees, by the way, no matter what happens. So, you know, this is what Rick Wool calls the point of no concern. And, you know, I have my own method. And by the way, the Upside Maximizer is a free report on the website. You'd have to sign up for the website. We will not spam you with a flood of advertisements, but you can see the report. It is free. You don't have to do that if you don't want. Do your own thing. I like to tell people the only way to do this wrong is not to do it at all. If you let it all ride and you wake up tomorrow and it turns out that, you know, Mr. Market's had enough, gold went too far, too fast, and it's just correction mode and just goes, you know, $100 down, $100 down, you know, that elevator down, and you didn't take any profits, you will kick yourself later.
No, I think it's important to note, I mean, for the viewers, you mentioning the possibility of gold going to 3,000. Obviously, that's a possibility, but it might not be what you think is most likely.
Yeah, no, that's not a call. You know, if you want clickbait headline, Elijah, you could put Lobo Tiggre calls $3,000 gold. You'll get a lot of clicks. I'll get a lot of hate. But no, that's not what I'm saying. And to try to be more helpful, it's not what I think is even more likely. I think that the central bank gold buying, I think the global allocation, the political risk, the global reallocation, Rick Wool's famous 2% versus 0.5%, all these things happening right now, and not to mention inflation. You know, the Trump agenda is highly inflationary. You know, I know Trump fans hate it when I say that. That's not necessarily a criticism. Whether you agree or disagree with Trump's agenda, it is inflationary. Come on. I mean, Doge did not save us $2 trillion. Europe's rearmament is highly inflationary. Russia's war is highly inflationary. The only one that's really been dealing with something that at least reportedly looks like deflation is China. And ultimately, they just announced a new 5-year plan. So ultimately, the printing press always wins in the end. So all of these reasons, I think, are solid reasons to remain bullish on monetary metals in particular, but commodities as a whole. I like copper and uranium, other things too. So I'm not a bear. And I'm not telling anybody, no, I didn't say sell everything. And when I took profits on these upside maximizers, I didn't exit the positions. I just took the profit or maybe took sometimes I'll even leave the profit on the table and just recover the initial investment. So I'm risk-free. I really like it. And I'm bullish on the commodity. I'm bullish on the company, the project, the country, all these things. I'll leave most of the money on the table and only recover my initial investment so that I can't lose. It depends. One size doesn't fit all. As I say, the only way to do it wrong is not to do it at all. I'm not making a bear case. I'm simply saying, dear reader, nobody knows what the next move is going to be. And how will you feel if you let some gain slip through your fingers? And by the way, if the next move is down and you took some profits, now you have cash to take advantage of that. If you're all in right now, how will you feel if there's a sale price in a month or two and you have no cash to act on it? And the answer is, well, Lobo, what if it goes to the moon? Well, I've just answered that. I have more money now in the market than when I started. So if it goes to the moon next, that's fine. Okay, maybe my 10 bagger turns into a 7.5 bagger instead of a 5 bagger. It's still 7.5 times my money. That's a fine outcome, Elijah.
Yeah, I think a lot of people have kind of an all or nothing mentality, and when it comes to, gold might fall to 3,000.
Let's sidestep that number. I'll be surprised. Breaking below 4,000, easy. 37, 38, not hard to imagine. I'll be surprised if it goes much lower than that. I'll be surprised if it hits 3,500. I'll be very surprised if it goes below 3,500. These are not promises or predictions. I'm just giving you my wolf whisker sense of the odds here to give you some numbers. That 3,000 number, it makes me nervous that you keep using it, because I would be extremely surprised actually if we got that low.
Right. I guess to make the point, though, that we don't know what the future holds. And if we have gains at the moment, as you're saying, it doesn't have to be all or nothing. We don't have to save everything for, a moonshot move or something like that. We can act prudently and kind of best have the most probable outcome be still really good gains by taking a little bit of money or a little bit of currency off the table there.
Or to call on our animal spirits, it's simply not true that if you're not a raging bull, that you have to be a bear. Like those are not the only alternatives. I like to think of myself as a hunting wolf looking for good opportunities.
Your take on silver as well. I know before Tuesday's move, I was watching an interview you did, and you said 50 is not probably the floor, and you were right. We have broken down below 50. So your take on silver going from here?
Right. Well, first and foremost, I do still see silver as a monetary metal, and it has been tracking gold more closely this year than copper, which may sound like, well, duh, it's a monetary metal. Well, but it wasn't last year. It was tracking copper more closely than gold last year. So I'm very encouraged by this action because I'm bullish gold. And by the way, I'm bullish copper as well. So how can you be bullish gold and copper and not very bullish on silver? So it's... the very last interview I did, I think I said something similar. And like clockwork, one of the first remarks was, this man hates silver. Oh, well, what can you do? Anyway, but the reason why I'm teasing this apart is because silver did have its own unique drivers in this leg up. It wasn't just tracking gold. It started zooming higher. And my interpretation is not unique to me. A lot of people were commenting on this. We had a physical squeeze in London. And I think that's what made silver really perk up. And this is actually good news, because that physical squeeze, that, I know that there's some uber bulls that think this is it. Silver's going to the moon. The shorts are all going to be busted, and silver's going to triple digits next. Yeah, maybe. But if not, if the folks at the LME can sort out the physical supply issues now, and there is data that suggests they are as we speak, then I think silver, it doesn't necessarily go down or go into a bear market. I'm not saying that. I'm saying that the extra oomph that it got from the short squeeze goes away, and then silver goes back to trend. And for all the people who says, oh, he hates silver, not at all. I think this is very good for both gold and silver, because if silver really was finally catching up to gold, even your most diehard silver bulls will tell you that silver usually lags gold at first and then more than catches up at the end of the bull market. So if we were in that catch-up phase, that would signal the end of the bull market. And I don't think we're there. I'm a fundamentalist. I don't think we're there for all those reasons we articulated earlier. I don't want it to be there either. I want it to go higher. Mr. Market doesn't care what I want. But I neither want nor think that we're at the end of the market. So silver catching up to gold was a concern to me. Silver catching up because of the physical squeeze in London that did not apply to gold is a huge sigh of relief for me. And, we'll see where it goes next. This does mean I think that there's potentially more volatility to the downside in silver in the near term than in gold. But, that's not a surprise to anybody in silver and gold. We all know that silver is more volatile than gold. I'm just saying beware of an extra spicy near term for silver. And if you're a bull, hey, that means more buying opportunities. And by the way, if you exercise some upside maximizers or whatever strategy you used, if you locked in some gains and now you've got extra cash in your trading account and we do get a sale price, well, that's a good thing. If you're an uber bull, the worst thing in the world is to have an obvious buying opportunity and no cash to act on it. I remember this in 2008. In late 2008, like particularly November, December, I had a lot of readers, they were long-term bulls. They got it. They understood that gold correcting down to almost 700, that was an opportunity. But the agony that I could hear in their voices, reading between the lines in the email, the agony was they see it, they understand it, but they were all in. They had no cash to act on it. So this is another reason why one should not let profit slip through your fingers. That doesn't mean you're a bear. It means, A, you don't want to lose money. Rule number one, don't lose money. And two, it means that you're providing for potential future opportunities.
Now, still with respect to gold and silver, one thing that you've noted, I guess, was a point of concern for how we saw a pretty dramatic pullback here in both metals is that during the last, exponential phase, the last blow off top in the 1980s bull market, we didn't really see a pullback. So did you want to expand on what gives you confidence that this wasn't the blow off top and, that the bull market is not over at the moment?
Okay, so the answer to that is actually the fundamentals. I am a fundamentalist at the end of the day. That's how I make my investment decisions. To the degree that I look at technicals, it's more like where are my entry and exit points? Like how tactically I execute on my fundamental strategy is where the charts come in. But to your point, the reason for this is some of the pushback that I've gotten when we were before this week's correction. When we're still in this hockey stick mode, a lot of the pushback I was getting for saying, hey, folks, whenever you got a hockey stick, nobody goes broke taking profits. Oh, and by the way, I said the same thing in early 24 when uranium went triple digits. And I got so much hate for anything other than uranium's going straight to the moon. And look at history. like look at what happened. So, I was saying something similar about gold. I was not calling it top. I was just saying, hey, some correction here is not unexpected. And then I had chartists responding. But look, in 1979, when gold was screaming up towards, $850 an ounce, look at that chart. There's no correction in there. It's just a smooth parabola upwards. Okay, let's accept that. Let's stipulate that as, what happens as you go into the blow off top. As we were just saying before, I don't want this to be the blow off top. Mr. Market doesn't care whether I want it or not, but based on the fundamentals, I don't think we're there yet. So if we weren't there yet, looking for some correction, an interruption in that parabola made sense to me, right? That's not a bear case. It's just saying that, it's not an end market case, all right? And so I think this break is actually, people hate hearing about a healthy correction. But in the context of my longer term bull case, I actually do think this break is a healthy correction. Because if it just continues screaming upwards, well, Elijah, we would be looking at a blow off top. And, okay, I'm long. Our audience is probably long. We could make a lot of money in the near term in this blow off top if that's what was next. But that would be it. That would, the most likely thing after this vertical move would then be a bear market for years, like a screaming back down in the elevator and then a bear market for years. Who wants that? Now, again, Mr. Market doesn't care what we want, but I'm just saying, be careful what you wish for. Nobody goes broke taking profits. It doesn't mean you're a bear, and it does load you for bear. Like, if we get a correction, you'll have funds to do something about it with. And so, yes, I think this kerfuffle we've had over the last week is very encouraging to me. It tells me that we're probably not at the blow-off peak yet, and that is a good thing.
With respect to the more, industrial metals in the precious metal sector, but not the monetary metals, for platinum and palladium, your take on that? We've obviously seen a huge rise in platinum this year. We went above 1,700 for a little bit, back around 1,600 now. What is your outlook in the platinum group metals at the moment?
Yeah, I've had some platinum bulls express anger at me. Oh, Lobo, if I had listened to you, I wouldn't have made any money on platinums here. Platinum's up more than gold. Yep, that is true. you can't kiss all the girls, and you only get black guys if you try. No, so I didn't make any money on platinum this year. Well, not really. I'm not going to quibble on that one. Let's just stipulate I didn't make any money on platinum this year. That's true. I did make money on other things. I'm not going to worry about the opportunity that I missed as long as I'm making money. I'm okay with that. But look at what happened here. It's not like platinum and palladium and gold and silver all marched in lockstep up into this thing. The industrial metals lagged significantly, not just silver. Silver actually responded earlier, but platinum and palladium catching up more now is a very recent thing. So this is not the same market that we've seen all year long in gold. And my interpretation of this, it's not that suddenly, well, actually, as you and I record, there's reports of a physical shortage in London on platinum too. So maybe there'll be a short-term squeeze here as well. But I don't think this is driven by suddenly there's this huge increase in automotive demand for platinum and palladium and not enough mine supply. And so the whole industry is now fundamentally on a more sound basis. That's not what I think is happening. If anything, I think the signs of economic weakness, which most hard metals advocates, hard money advocates would agree with me that there are signs of economic weakness out there, that's bearish for these metals, these PGMs that are, no matter how precious they may be, their use case is industrial mostly. There is some platinum jewelry, but not a lot. So what I think is happening, it's not that, the fundamentals improved here. I think that what happened is gold's screaming up, silver's catching up, we're hitting all-time highs, and people are jumping on board and saying, oh, yeah, I love it. I believe in this thesis. It's going up. But it's hard for me to pay an all-time high. Well, what's like this and still on sale? Well, hey, look, platinum's still cheaper than gold. Palladium is way below its recent highs. So I think that's really, I can't prove this, but for whatever it's worth, my old wolf whiskers, my sense of this market is that this was a Johnny-come-lately reaction to, gee, I really like the precious metal story, but I don't want to chase all-time highs, so I'm going to buy the relative bargains. And, that's fine. That can work. No telling how long that will last. And I haven't looked at the market action this week, but last week when gold and silver corrected, platinum and palladium fell sharply as well. Like, the magnitude on the way down was like the magnitude on the way up. So if you're a platinum bull, you better have, guts of steel to ride out the volatility, and, beware that, the Johnny-come-latelys, that these are not the diamond hands in metals and mining. So any panic that hits gold and silver is going to whack your platinum and palladium harder, I think, if I'm right about what's going on here. And they're both highly vulnerable regardless to further Trump shock or scary economic news out of Europe or China. So, buyer beware. This is not a bear case. This is a caution. And personally, I'm not putting money there.
Now, when it comes to uranium and I guess copper, which you can choose which one you'd like to take there, but I know those are two commodities that we've talked a lot about in the past. I guess I know in this year you had really high hopes for copper. What is your outlook for copper going forward here into the end of the year?
Yeah, it's funny. I've gotten hate for being so bullish on copper this year, but copper did hit an all-time high as well, at least nominally. But I must be honest and say not for the reasons I thought. And I've not moved in a big way into copper yet. I did find some opportunity that I thought was too good to pass up. But I'm still waiting. I still think that for the same reasons I'm cautious about platinum and palladium industrial metals, that's a reason to be cautious about copper. I think we've talked about it before, so we don't need to go into great length, but the bull case for copper, I think, is extremely durable. I think it lasts years, if not decades. It's Dr. Copper for a reason, an essential, critical mineral that does not need AI or electric cars to send it higher, but those things are obviously tailwinds. So extremely bullish. You could make a similar case for uranium. They're different, but you could call them both energy metals. So you could look at them as similar. And But the greater similarity is less so much in the end use than in the structural issues of supply constraints. And there was a concern about uranium that, high prices would cure high prices. And there was a lot of mothballed production that could come online. There was voluntary supply constraint, like with OPEC. And so I think it was reasonable for people to be concerned about uranium pulling back. But what we've seen since then is that basically none of the low-hanging fruit turned out to be easy to pick. The two biggest and best producers in the space have moved the goalpost back. You know who I'm talking about, the uranium bulls, right? Both of them have moved the goalpost, and pretty much everybody else is either late, off track, has cut their ramp up guidance, or has just flat out failed. They're not going forward. So I like them both. Both are supply constraint. Uranium is more recession resistant than copper, so that has me sort of near term more bullish on uranium. If I had an opportunity, an equal-looking opportunity in uranium or copper this week, I'd buy the uranium one, not the copper one. If I could choose only one, I'd go with the uranium one because uranium is more recession-resistant than copper. On the other paw, there's no copper reactor meltdown that can take the whole market south, overnight, whereas that is a possibility in uranium. I think it's unlikely. I don't lose sleep over it. I'm not worried about it. I invest anyway, but I always remind people that you should only invest in uranium, understanding and accepting that there is a tail risk that can have you literally wake up in the morning and suffer a major loss of capital. And that is not a risk in the copper space. So I like them both, but they have different risks and rewards. And I'm actively seeking to add exposure to both in my portfolio. Uranium now when I find an opportunity, copper probably on the next dip. If I don't get a dip, then I just buy anyway.
Well, Lobo, Tiggre, thank you so much for joining us today, especially during these interesting times in the markets where a lot of people are, wanting answers to their questions, not knowing really what's going on. So we really appreciate you sharing your insights today. If our viewers are interested in learning more, it's independentspeculator.com. They'll be able to get that upside maximizer strategy you noted previously. Any last thoughts before we leave you?
Well, speaking of questions, I do actually answer reader questions, even unpaid readers. Wow. In the free weekly digest, I answer reader questions, and we do not spam you with a flood of advertisements. Check it out.
Fantastic. Well, thank you so much, Lobo, for your time, and you have a good day, and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 20th through October 27th, 2025, while supplies last. First this week, 1 ounce Gold Philharmonics are just $99 over spot. Next, 2 ounce Silver Canadian Rocky Mountain coins are only $4.50 over spot per ounce. Finally, Kilo Silver Britannia coins are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.